Michael Burry. That name is synonymous with one of the greatest or craziest trades in history. The man who saw the 2008 housing collapse before anyone else. The man who bet against the entire U.S. economy and won. Now he's back, and he's just placed a $1 billion bet that Nvidia, Palantir, and the entire artificial intelligence revolution are about to collapse. But have you ever wondered why? Why does this one man consistently see the apocalypse when everyone else sees a party? This isn't just about finance. This is about psychology.
We're not just looking at his trades. We're looking inside his mind.
We're looking inside his mind. This is the psychology of a big short. To understand Burry's present, we must understand his past. The 2008 subprime mortgage crash defined him. He wasn't a Wall Street insider. He was a doctor, a blogger, a value investor who did one thing no one else did. He read the documents. While the big banks were packaging and selling these toxic mortgage bonds, Burry sat down and read thousands of pages of what was actually in them. His 2008 thesis was simple. The bonds were filled with junk. He saw a pattern everyone else was paid to ignore. And this wasn't his first win. He shorted the dot-com bubble. He even made a small fortune shorting Cathie Wood's ARK Innovation Fund during the 2021 tech crash. This established the public narrative. Burry is the prophet of doom, the Cassandra of our times, the one who sees the truth. But what if this genius isn't just about seeing the data? What if it comes from a brain that is wired fundamentally differently than ours? Michael Burry has been public about having Asperger syndrome. In a social context, this can be a challenge, but in investing, it became his superpower. Let's define this not as a social disorder, but as an information processing difference. People with Asperger's often have an intense, obsessive focus on specific subjects, and crucially, a reduced concern for social conformity, or what other people think. Now, think about Wall Street. It runs on social proof. It runs on consensus. AI is the future. Nvidia to $5 trillion. You're going to miss out. FOMO. Burry's brain naturally filters that out. He doesn't care what a CEO promises on TV. He doesn't care about the hype. He cares about one thing. What does the data say? In 2008, he wasn't swayed by the bankers telling him he was crazy. He was only focused on the bond data. Today, he isn't swayed by the AI hype. He's looking at the CapEx spending charts, the slowing cloud growth, and what he calls the AI money-go-round. He is immune to the narrative. This social blindness allows him to be the ultimate contrarian. He doesn't go against the crowd to be rebellious. He simply doesn't see the crowd in the same way we do. This leads to Burry's single biggest, most painful psychological pattern. He is always early. People forget he made his big short in 2005. For 3 years, he was wrong. His investors revolted. They sued him. They called him an idiot. He was writing emails begging them to hold on, even as he himself was doubting. This is the psychological price of being a contrarian. A famous saying goes, "The market can remain irrational longer than you can remain solvent." This creates a specific kind of mental pressure. You have to be so convicted in your data that you can withstand the entire world, your own investors, your own bank account, telling you that you are wrong for years. Most people can't do this. Our brains are wired for social acceptance. His is wired for data adherence. So when you see him delete his Twitter, go silent, then reappear with cryptic charts, this is the behavior of a man who has been at war with the market's irrationality his entire life. It's a defense mechanism. The media loves to call him Dr. Doom, a permabear, someone who is always betting on a crash. But let's look at his actual 13F filing, the cheat sheet for everything he's bought or sold. It's not all shorts. As of recent filings, he holds shares of Brooker Corp and Molina Healthcare. He has stakes in Lululemon and a consumer banking stock. He's even made bullish call bets on oil stock Halliburton and pharma giant Pfizer. This is not the portfolio of a man who thinks the entire world is ending. This is the portfolio of a value investor looking for mispriced assets. His psychology isn't everything will fail. His psychology is the crowd is stupid. He looks for consensus and bets against it. In 2008, the consensus was housing never falls. He shorted it. In 2021, the consensus was tech will grow forever. Cathie Wood. He shorted it. Today, what is the one thing everyone agrees on? AI is the future, and Nvidia is the king. A mind like Burry's is psychologically compelled to attack that consensus. He has to find the flaw. That's his entire model. So let's put it all together. Why is he shorting Nvidia and Palantir with bets worth hundreds of millions of dollars? 1. The data. His cryptic tweets aren't random. He's posted the charts. Charts of CapEx spending matching the dot-com bubble. Charts showing cloud growth, the backbone of AI, is slowing. His data-driven brain sees a historical parallel. 2. The consensus. He hears everyone, from Wall Street to retail investors, chanting Nvidia to $5 trillion. His contrarian brain sees a massive, overhyped bubble. 3. The fake narrative. He sees the AI money go round. Nvidia invests in OpenAI. OpenAI buys from Oracle. Oracle buys from Nvidia. His socially blind brain doesn't see an ecosystem. It sees a con, a shell game. He's not just betting that Nvidia's earnings are wrong. He's betting that the entire narrative of the AI revolution is flawed, just like the narrative that housing prices only go up was flawed. But does this powerful psychological framework have a blind spot? Burry's psychology is his greatest tool, but in 2025, it could also be his greatest flaw. What if the AI revolution isn't like the dot-com bubble? What if it's more like the invention of electricity? As many investors have pointed out, these AI companies have real earnings, not just eyeballs. Yes, Nvidia's stock is up 1,200%, but their net income, their profit, is up 2,500% in that same time. Palantir, the other company he's shorting, has 742 non-AI paying commercial customers. Burry's mind is built to find financial bubbles, but it may not be built to understand technological revolutions. His obsession with 2008-style hidden debt and dot-com-style CapEx might be a form of confirmation bias. He is a man with a big short hammer, and to him, everything looks like a nail. So, is Michael Burry a genius? Absolutely. Is he always right? No. He's a man whose unique psychology gave him a lens to see a truth no one else could. But the question now is, can that same lens see a different kind of truth? The truth of a revolution, not just a bubble. What do you think? Is Burry's psychology his superpower or his fatal flaw in the new age of AI? Let me know in the comments below.